All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update for Sunday, March 9th at 4:20 p.m. Go Mary Jane. Futures market have been open for about an hour and 20 minutes, but before we dive into looking at the price action, recap of last week's trading made a gain of $3,000 with 6 trades, 4 wins, and 2 losses. Moving right into the charts. So since the first of the year, we've transitioned from doing futures analysis and we're looking at the ETFs instead. But today we're going to look at the futures for a couple of charts. So the S&P 500, you can see here on Friday, SPY is the ETF. We went below the 200 moving average and then recovered back above it to close above for the day. This was also a bullish engulfing candle because the body of this green candle here fully contained the body of the previous candle. So that is a bullish engulfing candle and is a signal that the selling pressure might be alleviating here soon. We're also at that all-important support zone. But if we go out and look at the ES contract for futures, you can see that we actually gapped down from Friday's close. And on Sunday here, we opened below that all-important 200 period moving average. Now, I am not going to worry about that too much right now. I do think a bounce is still in order and still likely, especially because we're hovering around that range. We are super overextended on the daily RSI, and the MACD, even though it is still firmly in bearish territory, we are seeing a little bit of alleviation of the pressure here. So if you can see these little red histogram markings right here on the MACD, you'll see a bright red and a darker red. The bright red means that the distance between the MACD line and the signal line is increasing. That means that the bearish momentum is continuing to increase to the downward side. When you see these lighter markings, the darker kind of light red candlesticks there, whatever you want to call them, that means that the distance between these two signal lines is decreasing, which means that we may see a slight bounce first. If you look back in history and I zoom in on this, the last time that we had big bright red candles on this histogram switch to red, that actually called out the bottom of this run right here in the price chart, and we ended up having a significant rebound. I'm not expecting that big of a price bounce right now. We are in bearish territory, and I think really we can expect a bounce probably back into the 9 EMA, or if the bulls really want to try to make a stand, maybe back up to 5,900 on the S&P. So going back out to the ETF now that we've seen that little gap down on the price chart here, if overnight on Sunday today we recover this 200 period moving average, depending on where this price opens on the ETF, I would expect probably a bounce back up into the range of 583 to 584, somewhere right in that neighborhood, basically correlating to the 9 EMA with the downward pressure here and also into some of the chop from the left of the chart down on the left-hand side from back in December. Going out to the QQQ, basically rinse and repeat the exact same thing. We've come down, we've gotten just below that 200 period moving average. We're still super overextended on the downside for our RSI. And again, our MACD looks almost identical to that of the S&P with the pressure starting to alleviate a little bit, lending to my thesis that we are likely to get a bounce. Going out to IWM, IWM has gotten chopped up quite a bit more. You can see instead of hovering at the 200 daily moving average, we are significantly below that. We're still overextended on the RSI. We're still getting that alleviation on the MACD. If we toss this one out to a weekly chart, you can see we actually also broke the weekly 50 period moving average. And I'm going to put an alert right there at 216 because that is the line in the sand where we really need to get above if the bears the bulls are going to have a fighting chance at recovery here. If we look at this a little closer, we can see price came down and wicked down really close to this all-important 200 period moving average. It's right at $200. The wick low here came down to 201.73 and has started to bounce. I would not be surprised to see price come back up into probably the 213 to 214 range on this next bounce. And then it will be a battle to see if we can set a new higher pivot low somewhere above 210 or if the bounce just leads to another bout of selling that may come down and test the 200, if not break it and come down below that. Going out to the Dow Jones. Dropping this back to a daily chart, you can see we are still holding the 200 period moving average and this important support zone that has been tested multiple times over the last 6 months. It's my base case that this is going to hold for this week. We will see, but I do not expect price to get below that 200 period moving average at about $400.19 this week. I do expect probably holding this zone and trying to fight back up into the moving averages above it, which are at around 436. Going out to IBIT. IBIT is the Bitcoin ETF that I track. Looking at this does not show the full picture. Right now, we are hovering at Friday's close, but if we look here at the Bitcoin futures, it has actually gapped down 10%, or excuse me, 7%. If I turn off one of my indicators here to clean that up, we can zoom in a little bit. And we can see that we are holding from the gap zone right here on this red line that I've drawn on the chart. If we put this out to a monthly time frame, that is the monthly 9 EMA, which is very, very important for us to hold. If we do close below that this week, we are likely going to come back down into the 72 to 73,000 range, which would correlate to the tops of this previous consolidation zone. I am expecting that we are likely probably going to get some kind of a bounce here this week, but it might be a choppy mess. So trade safe and keep position sizes small if you are doing stuff on Bitcoin this week, because the volatility here is just absolutely insane with the ideas of strategic reserves being thrown around, not having market clarity in terms of what the heck that actually means for Bitcoin or other cryptocurrencies. So it is going to be a choppy ride in the short term. Going out to Ethereum ETF, ETHA. This is the BlackRock ETF that I track for Ethereum. Nothing really to see here. We are obviously in a downtrend, significantly being pressured by the 9 EMA. We've been overextended to the downside really ever since February 5th. So over a month now, we've been showing as overextended to the downside. The MACD is firmly in bearish territory, although it is slowing its pace and starting to threaten to try to cross here on the daily chart, which would lend itself to a bounce. If we get a bounce, I'm not going to be very aggressive with it, probably just targeting up to either the decreasing 20 SMA on the daily chart or into our diagonal resistance overhead. Either way, that's probably around $18.75 to $19. Current trading price is $16.31. Going out to our 11 major sector ETFs, XLB, we got the breakdown of this little parallel channel that I had drawn a few weeks back. We have now tested up into it and are hovering right on the lower end of that. I am expecting this is probably going to resolve to the downside, but this is going to be heavily dependent on what the S&P 500 and the Nasdaq do. If the S&P 500 recovers some over this week, we may get a bounce that is big enough to get us back into this channel, and that might end up being a fake out right here. But either way, I am not interested in trading this week. It just doesn't have enough clarity for me, so I'm going to be skipping this one. Going out to consumer discretionary, we are bouncing on the 200 period moving average. I like the look of that bounce. And if we twist this out to a weekly chart, you can see we also bounced on the 50 period moving average and have some historical price data here as well. So we're going to continue to watch this. But overall, I am assuming that we are due for a bounce here, probably at least back up to the 9 EMA around 211, if not coming back up to the decreasing 20 around 218. Going out to XLK. XLK technology ETF here, we are significantly below the 200 period moving average, below the 9, which is decreasing sharply, but we are overextended to the downside and have a slight slowing of momentum on the MACD as well. I would not be surprised to see a bounce come in the market this week on technology, which just got absolutely killed last week. Going out to XLE. Kind of a choppy mess. Obviously have our overhead decreasing diagonal resistance zone here. We are well below that, testing up into the 9 EMA and threatening to try to roll back over again. Bearish momentum on the MACD and in bearish territory on the RSI. I don't see a trade here, so I'm going to move on. Going out to XLU, bouncing on the 200 period moving average, not quite overextended on our RSI, but the MACD is signaling potential bearish move to come. If we toss this out to a weekly chart, you can see here we got the 50 period moving average around $75, so that will be a very important price level to watch. If we do test and close below that level, this would be an inverted cup and handle pattern, and that signals a top and probably more downward pressure to come. Obvious choice would be coming back down to around $70 to the increasing 200 period moving average on that weekly chart. Going out to XLP. XLP fighting the good fight here. We got back above our diagonal resistance zone, now testing it as support here, as well as the 20 SMA. We toss this out to a weekly chart. You can see a really vigorous bounce came in after confirming an M formation right here. We got a nice strong bounce the last several weeks here. And honestly, I think the bottom is in on consumer staples. This is a defensive area of the market that should hold up okay, even if the market tanks, because it is stuff that people need anyways. Going out to XLC. XLC below the 50 on the daily chart. If we toss this out to a weekly chart, we can see testing and bouncing off of the rising 20 SMA. If we break that line in the sand and close below it, let's just call that 98.5. If we get below and close below that level this week, that should signal more caution in the market heading into the following few weeks. Our RSI is decreasing rapidly and our MACD looks like it is topping out. So this might be an area for further declines coming up in the next week or two. Going out to XLI, industrials, tossing this back to a weekly chart. I see this as kind of a pennant or potentially an inverted cup and handle formation. If we break down below 130, that is lookout below. In terms of the daily chart, we are sitting and holding the 200 period SMA. So this could go either way. Honestly, right now, I don't see a particularly great trade on it. Going out to XLF. XLF broke down below the 50, got some selling pressure to end last week with a big doji candle or spinning top candle there. If we toss this out to a 3-year weekly chart, however, you can see that we closed below the important 20 SMA, and this should signal potential for more downward pressure to come. Going out to XLV, this one was the one area of the market that last week I said I was potentially bullish on. It had recovered all of its moving averages. Healthcare is a defensive area of the market, somewhere that people are going to spend money on regardless of any recessionary fears or things like that. As long as we stay above, let's call it 145, I am going to have a slightly bullish lean on this industry. If we toss this back down to a daily chart, a trigger back above the wick highs from the last week's trading, just over $150, 150 and 32 to be exact. That would be a signal potentially to the upside, and I would see potential to come back up to around 155. Going out to GLD, this is gold ETF. We are basically 4 dojis in a row here in a very, very tight trading range, basically playing this whichever way this breaks. If we clear the highs there of the last week's trading, around 270.40 cents, we will be slightly bullish to neutral. If we break down below the lows from the last trading week at 267.64, that would lean itself to the bears and probably coming back down to around 260. Going out to silver. Silver, going to clean up the chart here, get rid of some of those drawings. This is just a choppy mess on the daily chart. If we put it back into a weekly time frame, we can see MACD is curling up slightly. Our RSI has recovered back into bullish territory. I am not convinced, however, so I'm going to be staying away from this area of the market for a trade this week. And then finally, if we go out to US dollar just to see what it is doing, it has now broken the 200 period SMA. And if we toss this to a weekly chart, we are below the 50 as well and look to be headed back down towards the 200 on the weekly time frame, which should act as support. Now, finally, last but not least, let's go out, check our heat map and our economic data. For the heat map, you can see financials just getting crushed last week. Multiple banks and insurance companies lost 8 to 10% last week. So brutal week for financials, and it was actually the worst week in the S&P 500 ever since September. So for the last like 6 months, this was the worst week on record for that 6 months trading period. Also, we can see technology selling off pretty hard, consumer cyclicals selling off pretty hard. Really not much in the way of bullish action, except, again, not surprisingly, healthcare hiding down here in the bottom with meager gains. Now, going out to Forex Factory to wrap up. On Monday, we don't really have any economic data of interest, but Tuesday through Friday, we have at least one every week. Wednesday with core CPI and month over month and year over year CPI data is going to be really important. Also, PPI data on Thursday and consumer sentiment and inflation expectations on Friday. So jam-packed week on that, on top of any information coming out of the White House that might impact the market one way or the other on trades or strategic reserves. So with that, guys, as always, trade safe. Let me know if you have any questions. Hit me up in the comments if you have anything that you want to discuss, and I will catch you next week.